Hello and good morning to all of our viewers today. My name is Munyumba Mutwale, and we are live here on Money FM on Behind the Markets. This is the online edition. Today we're starting a little bit late. We call this the load shedding edition, and I'll be joined a little bit later by Vernon, who will be joining me for the daily roundup, the finishing off, or the talking about the off the grid solutions in our futuristic Friday edition. Today we'll be talking about household alternative power. While simultaneously, we'll also be finishing off our section on the 8 levels of wealth. For those of you who are doing your wealth planning for the year, please, you don't want to miss this one. And we want to thank you to everyone here. We will be live on 93.7 on radio, but right now I think we just knocked out a bit. And we are solely online, intimate for all of our online viewers. And thank you very much for everybody who is actually joining us. So there are three main topics today, but first, let's get through our daily roundup of the markets today. So when we get into the Forex markets, we are seeing that we are now on the 69th consecutive day of the kwacha losing value. The dollar is up 0.17% as of yesterday, and it is up 0.78% on the week and 5.27% on the month, with 1.63% loss of value of our currency year to date. We are trading in a very overbought fashion. So at the moment, you are seeing that the technical indicators are showing that the dollar is currently overbought, but still in a buying pattern. So there's a lot of optimism about holding dollars right now. So people are starting to store a little bit, and we are seeing that our financial sector is doing that. So that's part of people's diversification strategy. Now, looking at the Rand, we're seeing the Rand got a bit stronger yesterday. It's about 0.98% up from yesterday. So it did have a strong Rand day, up 2.01%, putting inflationary pressure on our economy, and up 3.87% on the week and 10% on the month, and 2%, as I said, year to date. So we are seeing a strong Rand situation, which shall actually now start to reflect possibly in our import prices or our import inflation. But we are seeing that there is a little bit of a sell-off starting to pick up on the Rand. It's still in that sell-off pattern, while the short term, it's showing buy signals and hold signals and a few buying signals. So these mixed reads on the Rand with a consistent sell, with a consistent buying up of the dollars. Now let's take a look at our bond market, our secondary bond market in terms of our S&P bond index. We are seeing that the bond market was up 0.6% yesterday, with 0.37% up on the week and up 1.65% on the month, and 0.474% up year to date. So we are seeing that the domestic bond market has gotten out the gates, moving up a bit strong. 11 days consecutively up, but we are prepping for an auction next week. So everyone still prep yourself. There's about 2.6 billion kwacha worth of government bonds with probably the same yields that we're going to see. We did see a T-bill auction, but there was a lot of subscription on the 364-day treasury bill. But really, at this moment, what's happening is that there's a lot of activity picking up in the shorter side of the bond market and the treasury market. So you are seeing people holding 364-day treasury bills, 2-year bonds, and 3-year bonds, while our government is trying to work out its debt situation. And therefore, a lot of people will become uncertain, hold shorter term securities for that period. So that's something you want to try and hold on to and look at as it plays out in your favor, whether it's going to play out in your favor. But I don't think it signals that interest rates will be coming down in the next auction, especially because everyone seems to be fixed in situations right now. I think nobody's really playing and moving the markets any strength. But I always tell people, always go in with a probability or a possibility that rates can move down by about 2%. That's why in all the groups that I deal with and all my client groups that I deal with, I always give people a bidding price that pushes the yields down by at least 2%. Remember that we use a single price auction. So even if you come lower, you still get the full price at the end of the auction. So that's just a safer way to make sure that you get kept in. But we are seeing secondary bonds up 0.6% on the secondary bond index, but in dollars down 0.18% because of the weakness of the dollar. We are seeing this dollar selling off has really been brutal for those who are holding bonds offshore and who are trying to use dollarized bonds. They're down about 3.1% at the same time to start playing around in our market for the people who are off. Now, we're in overbought territory for domestic buyers, but we're also in oversold territory for the offshore. So we are seeing mixed reads for offshore. Yields are still sitting at about 23.64%. So that's a signal that we're not going to see much happening on the primary market. Probably in the next auction, nobody's really playing around with the primary market trying to push yields. And finally, we're looking at the commodity market. The three key commodities that Zambia deals with is copper, oil, and gold. Copper is up 0.89% from yesterday, up 8% on the month, and year to date it's up 9.7%. So it's been a really strong year, mainly because two things have driven copper this year. One being the fact that China has released its COVID restrictions. As we're trying to put up COVID restrictions, China has actually relieved all of its COVID restrictions starting of the 8th. So you've actually seen quite a lot of China, you've actually seen quite a lot of the commodity market starting to push upwards. The second part we're also seeing is that inflation data coming out of America came out lower than expected. So that's the expectation, is that we're going to see interest rates also following that path. So that's what's also pushing commodity prices up, and therefore you see up at 9,185. It's been holding the position that it's been higher since June 16, 2022. We're also seeing oil picking up. Oil is up 8,000. It was up to 83.97, up 1.3%. This is signaling that we're not going to see much price change at the pump. Remember that because of the tax removal, and the pump and the net prices are pretty much staying the same. So we're not going to see much in terms of changes. I see oil probably unchanged unless we see a second half of the month where we see drastic change. Now remember, oil is a very volatile price. So therefore, it's anything can happen. So keep an eye on what we're seeing at the end of the month. Probably around the 21st, 22nd is when we can make a solid call on what we expect to happen. And finally, we're seeing gold up to 1,902.5, up 1.1%. Gold is also higher than it's been for almost 6 months, for over 6 to 7 months, up 1.73% in dollars and up 3.99%, 4.15% year to date. Meaning that if you are investing in gold as a Zambian domestic investor in Kwacha, the value of your gold holdings are sitting at about 5.8% up year to date. So already we're seeing the strongest assets that are operating on the market, the defensive assets. And if you look also at the stock market today, just briefly taking a look, we have seen that yesterday there was a continued sell-off again, around 0.02%, with Zambia brewery stocks selling down back to 7.0. So you are seeing, unfortunately, like I said, there's a little bit of change happening in the market, or a little bit of selling off happening in the early parts of the market. We do expect this. People do liquidate their positions coming about January. Then about February, March, we start to see buying up of stocks again when we start seeing results starting to come out. But together, all year to date, the stock market is down 0.2% on the day, and down 1.15% on the week, and down 2.57% in the last 4 weeks, down 0.9% year to date. So we have started our stock market on the back foot, while the global economy is actually putting upwards. So what are we seeing domestically? Defensive plays seem to be working. Short-term bonds, gold, this is where money is sitting. They're actually forming in a decent structure. So that's what you really want to pay attention to as your investment outlook happening now. Let's look at what's happening globally. In our global market, we did a lot of rallying today, mainly because of this inflation data. American inflation data was the key driver for yesterday, and the fact that it came in lower than expected. So for everybody who's actually following in today, American inflation did come in yesterday, Revolution Day. The second the data that we saw, we did see Namibian inflation coming lower than expected. They're grappling with it, so now it's down to 6.9%. Even the month-on-month inflation in Namibia down 0.3%. So more inflation pressure in our neighbors. We did see that the Ipsos PSI rating in South Africa did actually pick up, so the optimism come back. We did also see Indian inflation data also started to come down. It was expected to be 5.9%, but now it's only 5.7%. So while production data also starting to pick up, CPI in America was the biggest and most important one. Core CPI was 0.3%, while inflation core CPI came in with expectations of 5.7%. CPI rate came in at 6.5%. So the expectation that American inflation is cooling down is actually in line as what is driving in the markets expect to see that the lower interest rates. Sorry, it appears we unfortunately had an unfortunate run-in with our network providers in this country. Interesting, but yes, we are expecting that interest rates in the American market will probably start to turn negative, or probably start to turn downwards, and we should start to see interest rates coming back downwards. So that is the expectation of the global economy. We are seeing inflation coming down, with the expectation that interest rates will also start to follow. You're even seeing even import price inflation in Korea is down to 9.1% from 14% previously. Export prices also from Korea are only coming up about 3.1%. So you're seeing the global supply chain prices are starting to come back downwards, and we're probably going to see neutral inflation levels by the end of this year globally, going into much shorter terms. So thank you to everyone. Thank you to everyone who actually has been joining us, from Priska to Emmanuel to Casella. Thank you very much for all of you who are joining us. Now let's get into our readouts for today and what we're supposed to be looking at in terms of data reads that we should be seeing on the markets today. We did come out of inflation data, and we have jobs data that we are expecting, that we did see. So we did see jobs data from the US last week, and following that, we should be seeing GDP data coming out of the UK early this morning to give us a read to see if we're still seeing a growing economy. Expectations are that UK construction output will be slower than the previous month. Expectations will also be that GDP levels will be down from the 1.5% last month down to about 0.3%. So we will see a weaker UK GDP print. We'll be also looking at CPI data coming out of Spain, which is also expected to start coming down. Industrial production coming out of Italy, which is expected to also start coming down. Industrial production also coming out of Europe, while we'll simultaneously be looking at CPI data coming out of Botswana, our next door neighbor, with also import and export prices coming out of America also expected to come lower. So we are expecting to see lowering of inflation still, which should start pushing down lower interest rates. Now, the IMF has actually been issuing out a few concerns that countries that are developing countries are in high likelihood of default, mainly because of higher interest rates, which will now start affecting their lending rates, or the loans that they've gotten on the international market, be it countries like Pakistan, Sri Lanka, countries like Zambia. All of us who are in major defaults are in serious trouble. Especially due to higher interest rates. So the news that we're probably seeing American inflation starting to come down might actually start to pull down some of the interest rates that we're expecting to then harm some of the developing countries, which will then start to bring some capital back into those countries, as opposed to the exiting that we've been seeing from emerging markets and frontier markets over the last year. So thank you to everyone on that part. We are finally done when it comes to the news. And let's take a look at the latest news cycle. On part of it, the main thing obviously is US inflation data has been the one that has been pulling a lot, with also Chinese trade balance up more than expected in December amid easing of COVID curbs. That's a big news story that's coming in. We're also looking at oil. Oil is basically treading water, even though there is easing of inflation. That's part of the announcements as well that we're looking at here. So we are seeing the same stories here. China's 2022 trade with Russia hit a record $190 billion, mainly because China was basically getting its sole trade of oil from Russia. So we're actually seeing that divergence of the global economy. I think everyone needs to pay attention to that. That regionalism that we're starting to see happening around the world is actually becoming real for China to start having a record level of trade of 190 million, while the rest of the world is basically icing out Russia, is showing that East is sticking with East, West is sticking with West. Therefore, we need to prepare ourselves for a polarized trade world and not just trying to think that we can get this global trade system to work in us. Tesla also cuts prices in Germany as it looks to pivot to drive sales. Tesla is having an issue. So we are seeing that they finally hit that neutral point where they cannot just sell electric cars at whatever price they want. They are facing competition. So this is something we all have to start paying attention to. And that's good for us in our copper sector. And we're also seeing, obviously, the rise of BDY. So that is the outlook mainly from the global economy. Everyone needs to keep their eyes open for the fact that there is growth signs starting to come back into the global economy with a few shakes. Like, for example, what we're seeing in the UK. We are seeing the industrial sector probably picking up while we're seeing interest rates coming down and we're seeing global inflation coming down. So therefore, those risks are getting lower and lower on the global economy. And that rounds up that when it comes to our markets. Now, let's take a look at a story which actually hit our terminal earlier today. And this comes out of a conversation. I think one of our followers, we'd like to thank them for sharing the story, and we have informed them that we are going to be sharing the story regarding energy independent households. Let me just remove that off. Regarding energy independent households. Now, I think we've been discussing this issue with Zesco regarding obviously the outages and load shedding, and obviously the problems of our country, and the fact that water has been a relatively unreliable source, and also it's getting strained. Our water supply is growing. Our hydro capacity has been a problem as a country. So today we're going to give you a story that a gentleman named Andre Lesser, who actually now has given us some information here on Twitter. This was shared about his story of going off the grid. So I'm going to share the slides of this gentleman and also what this means for the solution of this country to try and curb future problems of load shedding, because load shedding is not behind us. In as much as we want to think it's going to be, and the promises that we're getting, by April, things will be sorted out and everything, those are temporary fixes. The underlying problems of load shedding still exist. A fast-growing domestic sector, okay, where demand growth is going up by 6%, and a mining sector that's making investments that's going to push the demand for electricity up even higher, because we are already strained with just 800,000 tons of copper being produced. What more when we get to 2 million by 2026? What more when we get to 3 million by 2031? These issues are not going away. Even if you build Batoka Gorge, where you put an extra 2.5, and then you double the grid capacity, you're trying to quadruple the mining output by the end of the decade. So that means that by the end of the decade, we'll then again be looking at load strain again. So the underlying issue is the mining sector and the domestic sector are growing too fast for the grid growth. The grid is only growing at about 4 to 5%. So we need to figure out a way that allows us to slow down grid demand by the domestic sector, especially, and the mining sector. How do we slow down the grid demand while picking up the grid supply? So we need to be able to do that, because the good thing is, if we have excess energy, we can always export. That's the beauty about being here. And we have Congo. So let's not forget, in as much as we are trying to triple our power supply, our copper output, remember that companies like Copperbelt Energy Corporation are connected in trying to also get Zambian electricity to service Congolese demand, who are trying to get cobalt out to service the electric car industry. So we're not just powering Zambia here. We've got to think about trying to power Congo as well, so that we can actually get this. So there is a strain that is likely to continue happening here that will continue to slow down the economy. So we need to start looking at how do we slow down the current issues so that we can increase the capacity to not only serve the local market, but serve the regional market without having to shut down electricity supply. So we want that, because the good thing about electricity export is that it brings dollars into our country, strengthens our economy, and strengthens our currency. The same thing that we complain about when we want to import things and we realize the costs are getting too much. So we really want to balance this equation out to try and help it out. We do need to export electricity. It's one of our major exports right up there with commodities, but we also need to make sure that people are not shut down. Okay, so this is the realistic and pragmatic solution that we have to start looking at. So let's take a look at what one individual here has shared with us, and I'm going to share this with us. So I'd like to thank, again, to the listeners here. This is a gentleman who's at Andre Lesser. And I met this gentleman before, and he's actually, like I said, chronicled his output. And I'm going to give you the thoughts on policies that we could do. What are job opportunities? What does the future look like if we all follow this prescription, and how can we turn the tide to get as many people here? So this is something I just want us to look at here today on Behind the Markets. So I'm just sharing this out with everyone. So these are some slides from his Twitter page that he had actually put up last year. And he's actually chronicled his outlook. So he's actually talking about how he and his family, and it says here, we have been living off the grid, power, water, and sewer in Lusaka for the last 6 months. So this is a person who's actually done it, people. Okay. And he's now put down the cost implications. I'm going to go through some of what this means. And he's actually breaking this down. And I hope everyone can see. Please notify me in the comment section if you can actually see this. It's actually put down here that he's saying that we opted for a full setup that would entail us keeping our electric equipment. Therefore, we do not have any solar specific items. So they haven't had to change the household mix. So, and everything is just normal electrical equipment, including pumps, freezers, TVs, and lighting. So they've just kept everything the same except the source of electricity coming into their house. I say it again, this is a family here in Lusaka in Zambia. Okay, so really, people, take notes. This is how you're supposed to do it. So he's put the equipment breakdown here. 12 500-watt solar panels, giving a max output of 6,600 watts, which were costing about 34,000 kwacha. 2 Victron inverters, which were 5,000 watts. And he said, I choose 2 instead of 1. That we have some redundancy. Now, there is some explanation to it, which had a cost of 52,000 kwacha, and 5,800 watt charge controller, which was 12,000 kwacha, and 4 1,200 amp hours solar gel batteries, which came to a total cost of 22,000 kwacha. Now, I actually did the full calculation. I think they mentioned this. This comes up to about 120,000 kwacha of equipment. This is what the total cost of going off the grid. He does later on mention a cheaper solution here, and he does also mention that water pumps and water heating is also added into this. There's no alternative. They're actually heating their water for their geysers on this. So this is something that you'll actually see. So this is a full-out solution of 120,000 kwacha. I'm putting in an estimate just in case for labor, installation, those things that you're probably going to see someone charge you somewhere north of about 25,000 just for installation of such a thing. I've seen people install jacuzzis for 12,000. So these are kind of the things the installation costs. I'm not sure if this adds an installation cost, but this is something that you have to look at. So I have looked at the table of all of this, and it would cost people about 120 to 140,000 kwacha to try and make 120. Inclusive of installation, probably we might be looking, unless this does include it, we might be looking at probably about 144,000. This is by the way, just to state this is also a goal of mine to go off the grid in the next 12 to 24 months totally, to make sure that I'm also off the grid, because I'm tired also of this situation. Now, he has mentioned what lifestyle they're actually now managing here. And if you can see, he said, with this, we're able to run a normal home, including 250 liter normal geysers, a single electric plate. Our stove has 3 gas plates and 1 electric plate. So there is some electric cooking and gas cooking, normal baking and grilling, normal ironing, a submarine pump. This is for water, a booster pump for farming, and another booster pump for the house. So this is what they've outlined here. Please, by the way, give me a signal in the comment section if you can actually see what's written here. I'll also share this on my page. They've also said that they've got a projector in their house. They've got multiple security lights for the night and everything else. Now, the pros, he said, is, look, he's saving 180 kwacha per month on electricity bills. He doesn't have to worry about load shedding. And basically, they're getting energy from the sun. And this is them. They've been living like this for 6 months. Just remember, people, they've been living like this for 6 months. Okay, this is not a debate. This is them actually chronicling their story here. The cons here is that it is pricey, as you can see. It's against Zesco. Zesco quoted them a 70,000 kwacha connection for their home at that point. So it is a bigger home, people, by the way. Also, bear in mind, this is a relatively bigger home, by the way. You also need some power management. He said our geysers turn on one after the other, not at the same time. And we can't heat water at night, so people have to be conscious. So this is one thing he's pointed out. Nighttime, they can't heat the water, so they have to preheat it or whatever. And he's putting out here that still works out well with both bathrooms having hot water in the morning. Again, power management. So you have to quickly learn power, wattage, the basics. So there's a knowledge curve that comes with going solar. You don't just switch on and life is the same. There's a knowledge curve that's actually coming with going solar here. And e.g., the booster for the house is always on. Sorry, let me just switch back. He's also said here that saying on the assumption that it only comes on when we're using water, reliably switches off when the taps are closed. So if this fails, we run out of power by 03. So this is what they've actually pointed out. The batteries will need to be upgraded to lithium phosphate when funds allow. This will cost about 70,000. So he's actually pointed out that they have got they're using a cheaper battery solution, but they do need to look at upgrading to lithium phosphate. And what he's pointed out in the ninth part of this is Zesco they have weighed this against Zesco connection as a backup, and they have and he says how to explain this to Madam. Finally, I think in the final parts of here, they've also pointed out in their chronicling of all of this is that the ways to do this cheaper would be some estimates without explanations, get a cheaper inverter, and that would cost 24,000. That's what they've chronicled here. As the output here, as the outline here. They've also pointed out here that to get 6 panels instead of 12, that'll cost 20,000, and to get 4 batteries, 22. This cuts the cost in half and gets you almost there with most of the electrical things running fine. So that's an option for those other people if you want to cut the cost in half. I have also gotten estimates because this is something I'm also trying to do, and it's also sitting at around 60,000. Some of the major providers are also saying, like, look, if you want to take your sockets and your lights and your appliances off the grid, you are looking at about a 60,000 kwacha solution. So it does make sense that 180 gets hacked down to about 60,000 kwacha. And he says you may need to replace the batteries soon unless you buy lithium. So you will also have to do some management, not all the items at once. By the way, all these supplies, he said, were acquired in Lusaka. And he does actually bring out here a real chart of the production and use around 12 today. He did actually panel this out. This is on the 26th of October. That was 4,500 watts being used by appliances, including cooking, geyser, pumps, 5,000 producing by the panels. And here is the picture that the gentleman puts out here of what's actually happening with their household load, so that you can actually take a look at it. And finally, they have said this was something that came out earlier this year. Addendum: solar works during the rain season. So everyone has that concern. This is a gentleman talking about the Zambian current rain season. Solar does work during the rain season. Yes, in our experience, it works even better than some really hot days when it reduces the output to avoid overheating. This reduces solar in the dark, overcast days. So cloudy but bright, rainy but some brightness, it does actually work. In the current rain season, we have only had 4 days of lower output. By lower, I mean all appliances like pumps, fridges, screens are working perfectly. The only thing was one of the geysers was out. Of the 2, did manage to heat water fully, so we still had about 150 liters on the worst days. So this is the experience of somebody in Zambia, and he does actually point out, here's the pictures of the appliances. So this is the story of a Zambian couple here, indigenous, our people, who have actually gone off the grid. And this was the explanation that they gave of their story of going off the grid. So now, what does this mean for all of us? I mean, for me as a person who's actually looking at how to try and do this, one of the biggest things I've seen is that in order to bring peace to this country, we need to start talking about energy independent homes. I will share that, by the way, on my page for everyone to see, and the cost breakdown that he actually did put. Now, the first thing I'll look at is the cost. The cost did come up to about 120. That is really pricey. But I think one of the things he pointed out is, says, look, I'm paying 1.8 a month when I'm connecting to Zesco. So this is coming out to 120. Now, we did the calculations of what would a 5-year loan, if people had access to 10% interest on a 5-year loan on a regular loan calculator for, so we did a simple loan calculator of 120,000 kwacha, because that's what that would cost you if you had to utilize a loan for 120,000 kwacha at 9%. We're looking at the basic 9% interest for 5 years. And then we calculated what that would be. So for 9% interest, that'll cost you about 2.5. Okay, so interest and principal being paid back for 5 years at 9%, which is the BOZ rate, would cost you about 2.5. 10% would cost you about 2.55. So that's a 10% interest charge that you would be paying on that. So it does slightly increase your cost if we were to do this via loan facilities at 10%. It only becomes neutral to his Zesco bill, for example, if the interest rate maybe comes down to about 5%. Even if we're looking there, it's still not all the way. Even if the interest rate came down to about 5%, it's still about 2,200. So this is still a bit of a costly method if you were to get a loan. If you do it cash, you do it at 120. You're paying the same as your Zesco bill. But the reality is that's the case. So that's one side of the equation. If you were to get a loan for that. Now, remember that average loan rates in this country are sitting somewhere around 20%, if not 30%. So we're even seeing vehicle asset finance loans are currently somewhere around 16 to 20%. So average it out at about 20% if you have access to a loan. I'm talking about bank loan. I'm not talking about an MFI. So we're looking at a microfinance. So you're looking at about 3,180 a month in loan repayments if you want to try and get a 5-year loan for this model. So this is similar to getting a relatively expensive car. So it's something you need to think about. But by the way, comment here quickly on your thoughts on that. What are your thoughts on going on that off the grid solution and that breakdown? And now that's the expensive option. So let's say you take the less expensive option, which is about 60,000. And you're trying to get a loan, you have to be paying at least 1,500 if you get the 60,000 solution. And if you were able to get 10%, maybe you get that loan at your workplace or something, it's 1,200. So if you get the expensive option, you're looking at about 1,000, you're looking at about 2,200, you're looking at about 2,400 to about 3,200. That's the 120 option if you were to pay a loan over 5 years. And if you're looking at a loan over 5 years, for the 60,000 option, looking at about 1,200 to about 1,500 repayments on a monthly basis. So that's a baseline of what this would mean to an average household. Now, electricity bills are expected to go up. Remember that. So that's one thing. So bear in mind, we're still dealing with the fact that electricity bills are probably likely to go up in this country, probably somewhere during this year, because the excuse will be that if we don't raise the electricity, we won't have enough cash to be able to now start dealing with load shedding. So Zesco is going to eventually push up the bill. So prepare yourself. This is a reality because the grid is still under strain. Let's stop playing with ourselves thinking that it's not. The grid is still under strain. So the second thing we have to look at is what can we do as a country? So that's one option. What can we do as a country on policy basis? What should we be asking our leaders in this country to be doing so that we can make it easier? Now, this solution seems bougie. Everyone will say, but how does this work for the barber? How does this work for the welder? How does this work for this? I'm going to have to be pragmatic and realistic with people. This is not the solution for the lower parts of the income brackets of the economy, which is the masses. And whenever we speak politically, we like to talk that way. The reality is, out of the domestic sector, which consumes 40% of power, the majority of it is being done by the middle class of this country. The households that have got pumps, the households that have got irons, the households that have got microwaves, the households that have got plasma TVs, that got everything. These are the people consuming electricity in masses. So if you want the benefits of going off the grid to trickle down to the plumber, the welder, you can't start rushing to make solutions for them. You need to make solutions for the people who can afford to make repayments of 1,200 to about 3,500 a month. Why do I say this? If they go off the grid, you are freeing up a huge chunk of the grid to be able to serve the barber, the plumber, the welder, those people. So you can allow the grid to serve the lower parts of the income spectrum and allow the people who are in the middle to upper parts to be able to serve themselves with such solutions. Now, synthetic gas is an option. There are many other options that we should be looking at as a country. So these are your two options. So that's why I'm saying it's much more effective if we start to target the middle part of the economy and the middle part of the income, the households that are earning north of 10, 20,000 kwacha per month, to get them to get off the grid. The people who are in the top third of the economy in terms of economically or earnings wise, get them off the grid. And get them the solutions. How do you get them to be incentivized to go off the grid and to start looking at being able to serve themselves with their own equipment? Now that's difficult. Plus, we're also dealing with the fact that solar is still working out some kinks. But this is a person who has actually done it here in Lusaka. So how can we mimic this? So here are some solutions that we need to think about as a country. And like I said, give me your comments on what you think about this. Give us your comments here on what you think about this. One of the things we should be looking at is that for 100,000 households, we did a simulation of what happens if 100,000 households did the exact same thing Mr. Andrew Lesser did. What happens if 100,000 households do this? Well, if 100,000 households do this, which is 10% of the people of the domestic sector, domestic client base is about 1.1 million. So if 100,000 households did this, okay, remember that we've gone from 100,000 households to north of 1 million households just in the last decade. Connections have been through the roof in this country. So if we did this and connected 100,000 households in this country, one of the things we would find is that would be the equivalent of 300 megawatt power station. Now, a 300 megawatt power station in Zambia being built would cost the country, or at least cost ZESCO as a power producer or any independent power producer, north of $800 million to actually implement it. It would take about 5 years. This same solution of getting 100,000 homes to do the exact same thing would cost households collectively $900 million. So the capital outlay is no different. It's no different to build a hydro station than it is for people to build this. However, the cost is not sitting on the government, and the expectation is not sitting on the government. It's not taking 5 years. It's individuals. It's scalable. It's something that can be done on micro levels, and it's much more flexible. Okay, so this solution is a much better solution, not because it's cheaper for the country, but it's mainly because it's more flexible, agile, and quicker to get into the grid and will feel the impact. Because that man who went off the grid and his family are off the grid. That's it. The grid is no longer dealing with them. So in less than 6 months, they're gone. Instead of us waiting 5 years to go from groundbreaking to actual commissioning and actual power, and then have ZESCO trying to manage it. So that's one point we need to look at. So that we do need to look at how do we incentivize the lending system? Should the government come up with an $800 million loan scheme for people to be able to transition and then push that through the banking sector, the same way we did the medium-term facility, and then just tell the banks, look, we as the government are going to have zero interest. You add on a 9% maximum markup, and then you spread this through your client book, and then get as many people. We have guaranteed this loan. Okay, so there's no repayment required. If you lose it, you lose it. It's fine. We're just using you as a distribution network. That's an option that we can be looking at as a country, while simultaneously we could look at maybe direct distribution, or maybe we can have financing options for all the solar providers, all the people who can provide such solutions to households. The key is to get the first 1,000 people. This is where the green bond space can be talking about. We've talked about this through the market, that the green bonds industry should be looking at it in my sector, how to structure financing to be able to get people to access such. at a much lower interest rate, because we're trying to get people to access this at about 9%. What are the incentives we can give to landlords? So can the government come up with a package of tax incentives, maybe saying, look, you'll pay half the land rates, or a quarter of, or what's it, one third discount on your land rates if your house is off the grid? What incentives are we giving directly? Because if we give it to the solar companies and you give it directly to those companies, they'll pocket the difference like they did the last time. We gave zero tax, zero VAT, zero import duty, and all the solar companies did was pocket the difference. That's all those guys did. They just pocketed the difference and just kept that as profit. So how do you get the consumer to move faster on it and get it to be more accessible? The incentives need to be packaged directly at the consumer, not at the seller directly. We need to push the incentives to the consumer. What tax rebates, tax discounts? Can you get a VAT discount given directly to the person so that they can finance part of the project themselves? Maybe that's the part. If you go off the grid successfully, you can go and claim a VAT discount on it, or a VAT reimbursement on it from ZRA. Maybe these are the things that we should be talking about as a country to get as many people to get off the grid, or as many of the high consuming households to be able to get off the grid and transitioning away. So this is just partly what we want to start looking at as a country. So now, what does this mean to you as a household? So I'm also going to look at what the gentleman's family was talking about. They were talking about the fact that they're not paying the 1,800 in ZESCO fees. There are some things that he did mention. He said, look, I need to upgrade to lithium phosphate batteries because that's going to at least last a lot longer. So there's another capital outlay we need to take a look at there. That's going to cost about 70. So maybe instead of the 22,000 batteries, that it'll cost a bit more to transition towards lithium phosphate. So we're looking at maybe a total capital outlay of somewhere around 170 rather than 120. Okay, if you're getting the full service solution. The other part you need to look at here is there are three costs that are going to still be the same as keeping yourself on the grid. So the costs don't go away. They have just transitioned. Let me actually break down what costs the same gentleman's family are probably going to incur. One, insurance. You do need to insure that solution because you don't want theft, fire, anything to take away that huge investment. So you need to do all risk solutions or all risk insurance. You need to go and sit down with your insurance company and get an all risk insurance on it, which will at least cost you 3% the value of what you want to do, the replacement cost of what you want to do. Judging by the calculations there, we're looking at anywhere for the 120,000 solution. You should be paying an insurance premium, which is the equivalent of 300 kwacha a month or 3,600 kwacha per year. Okay, so already that's 300 kwacha. Now, I always tell people 5% of anything should always go to maintenance. You should always be spending, whenever you own something, always remember, people, the costs of ownership are the 3 R's: risk, replacement, repair. These are your 3 R's of the cost of ownership. Someone write that down in the comment section. Be good just to make sure somebody has actually remembered it. Risk, replacement, repair. Always look at those 3 things. So the risk is the insurance. So he has to insure it and make sure you're paying about 300. Replacement, you need to spend about 5%, the value of that. So he's going to be spending about 500 kwacha per month on, not replacement, sorry, on repair. So making sure somebody can come in and check the system, maintain it, make sure it's running well. You always need to put aside a 5% maintenance budget for anything that you own, be it a TV, be it a phone, be it a computer, anything you own. Always have a 5% maintenance budget as part of it. And I think somebody has actually been listening. Thank you very much. Risk, replacement, repair. The final part you should look at whenever having such a solution is also replacement. So you need to at least give yourself 5 to 10 years to be saving up enough money so that when these things pack up, they do need to be replaced. Okay, the lifetime of these things, they'll tell you it's 20 years, but it'll last 10. So in 10 years, you need to replace it, just like any car, anything. So anything you own, you have to start storing aside money into a savings fund so that the day this thing packs up, you then take that money and then you just replace it. So that same 1,800 kwacha they were looking away from actually comes back in financial costs such as insurance, repair, and replacement. So risk, replacement, repair still is the cost of ownership. It doesn't really transition. So the benefit is not really cost reduction. The benefit is inefficiency reduction. You have your own system. You are free. When the world is being load shed, your life continues. You don't have issues. Okay, that is the peace and continuity of your life that you're able to get, and that you're able to be that you're able to still be productive with. So the cost doesn't go, it just transitions. Now, in that, there is actually going to be some economic activity. If you get hundreds of thousands of homes off the grid, now you have to get off the grid insurance. So insurance companies are going to benefit from this, because they're going to have to now start insuring such solutions. We're also going to have to start getting people to do repairs. I want you to think about this. If you are a person who is an electrician, one of the things, because this is a growing thing, by the way, people are already trying to get off the grid. People are buying inverters, solar panels. These things are selling out like hotcakes. So people are tired of this load shedding story. They are already starting to go off the grid. People are going to need you to maintain this. So if you're an electrician, you may want to start familiarizing yourself with solar maintenance, solar system maintenance for homes. So think about this. If you're charging a house 500 kwacha maintenance every single month just to do checkups, okay, and you do this, you do a once a month checkup with a house, and let's say you've got 30, 40 clients, you're earning about 15,000 kwacha per month just on that. Okay, and all you have to do is do a checkup once a month on each. The same way people clean pools. I think you've seen people who are professional pool cleaners. So this is something that's going to pitch up on a lot more houses. So if you're an electrician, you may want to start familiarizing yourself with some of these things as well. And that's something you want to start working on as a country, as we want to start looking at. So that's something to look at. And also people will need to start storing some money away. So even the banking sector, people will be saving up for these things. So that's if you're not loaning for it, if you're not getting a loan scheme for it, where people can kick in and get some money for it, because this is part of what we'll see. Now, demand for these things will pick up. Imports will pick up. There'll be business in that section. Solar installations will go up. So as a country, I think we should be targeting to get just the first 1,000 homes onto the system. That's what we should be looking at. We should be looking at trying to get the first 1,000 homes onto this system to do that. We've actually got the gentleman here who's actually did this. He's actually given us a nice comment. Thank you very much, Andre, for actually joining us here. And he's actually put here, he's saying once the incentive loan scheme kick in a country, the level at the country level, the actual manufacturers would also see volumes and be motivated to either supply directly to the country or assemble in the country. Lithium batteries assembled in the country and cells would be far cheaper. That is correct, by the way. That's actually correct. That it would also do that if you do incentivize it, you can actually bring production activity. So if you're talking about job creation, the solar sector actually can become a strong job creator through this problem of trying to get people off the grid. You can actually create employment for the next 10 years, especially on the lower spectrums of the income level. We're talking about the people who work with their hands, the people who are more skilled labor than they are knowledge workers. So let's not walk away from this. This is actually a big opportunity for us to even start dealing with the lower level employment in this country. So this is actually a big thing. So we're actually seeing that there is a conversation that's boiling up here. And yes, the majority of Nigerians are off the grid using gensets, but from the look of things, solar is the best. It is an actual option. Thank you there, Kayla. So that's just something I wanted us to look at as a country. Individuals, what does it mean for you? How to start saving? How do you kick in things? Andre, thank you very much for your story. Please look him up on Twitter. He has actually saved it. I'll be posting his story on his page. And thank you for somebody who's actually shared what this means for us and given us all a roadmap of what we'd be able to do. My experience right now in the alternative energy space and backup electricity systems is inventory is running out. Even light bulbs are running out. The rechargeable light bulbs are starting to run out in shops. So we need a solution that works well. So we have been reaching out, but the capital markets should be stepping up and looking at how to package loan schemes, green bond financing. If we can kick this off as a country, just getting 1,000 homes through such a scheme, with the goal of getting 100,000 at one point, and then with the goal of transitioning the domestic sector to self-generation, the same way Elon Musk is dreaming of with Solar City. If we can try and do the majority, at least of the middle income upwards domestic sector, to be self-energized, we are actually looking at a very big transformational goal, and that can take us off. Now, part of what we can also look at is there's alternative gas geysers, there's synthetic gas that you can also use to power a house. You can also now also gas stoves. So if we can just look at changing the household domestic energy mix, we can actually fix this as a major problem. So thank you to everyone who has actually followed this. Now, I did promise you yesterday that we will be talking about our levels of wealth. And in these final 5 minutes, I know that we don't have the main news that we're dealing with. So we will actually just tap into these final 5 minutes to talk about something I call the 8 levels of wealth. So to everyone, please, once again, it's note-taking time. To those of you who are with us on Facebook, it's note-taking time. And once again, please give us your comments on this whole story of trying to go off the grid. And maybe if you've gone off the grid, share your story with us, because we'd like to talk about as many people who are doing it so that we can show as a country that this is something that we can actually look at doing. Now, in the 8 levels of wealth yesterday, I gave you a targeting tool called the 8 levels of wealth, something that you can actually be looking at as an opportunity for people to be to always look at. And Andre, you're welcome. He has actually said thank you for your input, and we'll rush to get insurance. Yes, get insurance and start looking at a maintenance plan. That's actually very important. Now let's talk about the 8 levels of wealth. All of you are doing your planning right now. You're doing so much planning for the year. But what you're really trying to do, your goal is to get to wealth. You're trying to get to wealth status. So they are, I would call these the 8 levels of wealth, but it's also really 4 of the levels are of financial status, and there are mainly 5 levels of wealth that I want you to look at, where you are now considered wealthy. Okay, wealthy. Now, when I'm going to be talking about assets, I'm going to be talking about liquid wealth assets. Liquid wealth assets are passive income generating assets, assets that make money without your effort and energy. And there are really only 5. Okay, there's stocks which pay dividends without you being there, bonds which pay coupons without you being there, houses which pay rent without you having to work in them. There is a bit of work that sometimes gets done, but houses which pay rent without you having to work in them. Interest, you get deposits or loans or any fixed income instruments which pay interest, and you get ideas which pay royalty. These are the only 5 known passive income generating assets. 5, okay? So please put in, like I said, give me the emoji that you're actually taking notes. There are only 5. So when I talk about wealth generating assets, I'm talking about these 5. And I'm also going to be talking about passive income, because the issue of wealth is not money made while you're awake. It's money you make when you sleep. So what assets are at work that are generating money while you sleep? That's what we count as your wealth. Not how much you get paid from your job, not how much your business pays you, which you actively work in, but how much of the things you don't actually have to physically put energy and effort into, that you've put money into instead of energy and effort. How much are those things making, and how much can they change? And we're measuring that against the minimum living standard. So it's just something I want you to look at whenever you're doing goal setting here. And the measure of goal setting is, where am I? Where do I want to get to? What's the next level? And one of the key things I'll tell you is, if you've just entered a level of wealth, you need to give yourself up to 5 years to get to the next level. Okay, unless you're in level 0, 1, 2, and 3, those ones you need to get out of in the next year. You don't need to be sitting in those for 5 years. You need to be out in 1 year, 2 years max. Okay, if you're trying to deal with your finance, you need to get out of that. Those are emergency situations you need to get out of in 2 years max. So we should be talking about that part. So the first level of wealth, which we'll start off from yesterday, is called dependent. That is when your debt payments plus your monthly obligations are higher than your income. Okay, your debt payments plus your monthly obligations are higher than your income. That is a dangerous situation. It means that you are spending more than you are making. You need to exit that situation. You are in a state of poverty. That is dangerous. The majority of this country is in that situation. Okay. So that is when all your collective monthly bills plus any debt payments you need to make are higher than any income that you're making, the total income that you are making. You are a dependent, because you are dependent on someone to actually put money in. So you are dependent. You are solvent. In other words, you are liquid and you're able to keep up when you're current on debt payments and obligations. So in other words, when your income is equal to debt payments plus monthly bills, but you've got nothing that you can save. You've got no savings that you're able to do at all. You're just living in equilibrium. That's a dangerous situation because any slight inflation will whack you out of equilibrium and you'll be in issue. So level 1 is called solvent. Okay, you want to be there, but you need to get out of there as quickly as possible. 0 and 1, people, you need to get out of those situations in 6 months. If you are in these situations, your goal should be 6 months from now to get out of those situations. Okay, these two are a state of emergency situations. So you need to start looking at tactics, strategies, and habits that you need to implement to get out of those in the next 6 months. The next one you're looking at is stability. Getting to 25,000 kwacha to 50,000 kwacha in cash or cash equivalent. Maybe you're keeping money in a money markets unit trust. Maybe you're keeping money in a savings account in the bank. Maybe you're keeping some money in a village bank. Though I don't really advise people to keep a large swaths of money. The 25 to 50,000 kwacha can cover you for 3 to 6 months of what we call basic emergency, meaning you can cover food, utilities, housing, transport, and clothing for 6 months. Okay, you're able to finance that from 25 to 50,000 kwacha as long as you're not. I'm talking about basic life, and maybe get some term insurance, basic health. Maybe you're paying your basic NEMA there, disability, and some basic property cover, 3% all risk property insurance. Anything you own, you're just insuring it to make sure if it gets stolen, you're not set back horribly. So 25 to 50,000 kwacha. If you don't have income coming in, you can live a basic life for 3 to 6 months just to manage yourself. Okay, you can just survive, sit, and make sure you don't pass away from starvation and pain. The third level of wealth is called basic freedom. This means you've got 25 to 50,000 kwacha in the bank and you've got no short-term or high-interest debt. So you've saved up some money, you've got no short-term high-interest debt, and you've got some excess which you are saving. That is called basic freedom. So this is the level which is your baseline. If you are below this level, you got 6 months to get out of there, because you don't want to persist in that level. So take notes, people. If you are in level 0, 1, 2, and you're trying to get to 3, you need to be out of those levels in 6 months. Whatever tactics you need to employ, do you need to take on a side hustle? Do you take on extra work? Do you need to push yourself? What do you need to make sales commissions? Whatever you need to do, you need to focus on getting out of that situation in 6 months or less. Okay, that's your first goal. Your next one now is to get to protection. This is now where you start looking at in the next 5 years. In the next 2 to 5 years, I need to get here. Protection is 500,000 kwacha in liquid wealth assets. Remember, I just mentioned this. Liquid wealth assets are passive income generating assets. So you need to focus on getting yourself to this next level. So if you're on basic freedom and you're not on protection, you don't have 500,000 kwacha of stocks, bonds, unit trusts, houses, and when you are measuring your houses, the method I utilize, I understand these valuations, yes, but for the purpose of standardization of wealth, you take your rent and you multiply it by 133. Okay, you take your rent and you multiply it by 133. The monthly rent that you pay, multiply the monthly rent you receive, multiply that by 133. If it's got no rent on it, take it off this. We're talking about active houses where there's somebody in there renting, not things that have got value on paper. We're talking about things that have got cash flow generation capacity and value. So let's take a look at that. Basic protection means that if you were to liquidate your assets, you'd be able to live off them for 5 years. So it's called 5 years annual expense cover of basic life. So that's what we call protection. Okay, so really you have to focus here on trying to get basic protection, 500,000 kwacha. Security. The next level of wealth is called security. At this point, you are able to secure your basic needs using passive income. So the passive income that comes out of your assets, be it rent earned, dividends earned, coupons earned, interest earned, royalties earned, whichever one of these, whatever combination, your total passive income, when you got about 1.25 million kwacha worth of assets, liquid wealth assets, that should be able to cover 1.25 times your basic expenses of food, utilities, housing, transport, clothing, and insurance. That should be able to cover that. Okay, you should be able to live, you should be able to survive. So this means you have secured your existence. whether you're at work or not, you have secured your existence. The second part you should be able to look at, the sixth level of wealth, okay, is called independence. This means at this point, whether or not you work, your lifestyle it cannot be destroyed. You can have a decent lifestyle. At 3 million kwacha, you should be able to generate about 20 to 30,000 kwacha a month worth of passive income. And a passive income flow after taxes, which is about 2.5 times basic annual expenses. So your needs can be taken care of, and the excess can take care of your wants. So passive income, are you getting coupons coming in? And remember, I'm not looking at the revaluation of a bond. I'm talking about coupons themselves. I'm talking about dividends that you're generating. Whatever money is coming in, that should be measured enough for you to look at if you have 3 million kwacha worth of financial assets. That is independence, meaning you are not free to do whatever you want, but you are not dependent on even your job. You are financially independent when you get to 3 million kwacha of net worth assets. I am not counting your idle land. I'm not counting your unfinished houses. Not that stuff. Active assets that are generating cash flow or liquidatable on a public market tomorrow. Okay, that's what we're looking at. Active assets, unit trusts, cash sitting in a bank, bonds, stocks, which you can sell if you want to. Those are the things we're looking at. Okay, independence is 3 million kwacha. That is what when you hit that state. So remember, when you're at one level, give yourself 5 years to get to the next level. Keep giving yourself 5 years to move from one level to another. Freedom. Okay, freedom now is more aggressive. Financial freedom, we put that number at about 5 million kwacha. We adjust these every 3 years. About 5 million kwacha. This means that you're of liquid wealth assets, which means the cash flow or the passive income that comes from this should be equal to 5 times your basic expenses, which means you can finance your wants, your desires, and some of your aspirations. You could be talking about vacations. You can talk about the schools you want to send your child to. So you have passive income that can generate close to about 50,000 kwacha a month. This is your choice of life. And then finally, abundance. When you pass about 6 million kwacha worth of net worth assets, money is not your concern. It is the quality of your life, the quality of your legacy. You are now thinking about things. When you are free and abundant, you are thinking about legacy things. You are thinking about your legend, your legacy, and your lineage. And I want you to think about that. Those are your 8 levels of wealth. So give me the note-taking emoji or a thumbs up if you really got any value from this. But the main thing I want you to look at is, where are you? If you are in the early levels of wealth, you need to be looking at exiting that the dependent, solvent, stable, basic freedom. You need to get out of that in 6 months or less. Once you're above, you need to give yourself 2 to 5 years to get to each level. And you plan your finances according to it. This is called an inter-year mission. And if you're looking at how to get to financial freedom, it's where are you? Give yourself 2 to 5 years to get to each level and calculate how long will it take you to get to financial freedom. And that is the end goal, because once you're at financial freedom, you've most likely created the foundations of intergenerational wealth if you pass that on to the next generation and you pass the financial acumen on to the next generation. Those are my 8 levels of wealth. I'll be doing a lot more series on it. We will be now looking at planning, at the financial planning part, the financial matrix. Please join me every morning. I'll be taking you through how to go through the 4th part of the financial matrix and also planning out your finances and your life. So thank you very much to everyone who has followed. I know that we've done an extended session of Behind the Markets, and I know we didn't manage to do it online, and hopefully it will be able to play later on today. But it is here online for everyone on the various pages. Have a wonderful day to everyone. God bless for the weekend. And thank you once again to Mr. Andre for sharing your story about going off the grid. And hopefully we can all put our heads together about how to take as many families in this country off the grid and to look at solutions that can free up our grid for export and for industrial development while we, the people, move into being able to energize ourselves. Once again, God bless. Have a wonderful day.